So 2019 outlook. Can you just give us your thoughts first on South Africa? It's probably another tumultuous year ahead, given the election coming up. But how does that impact on investments?
2019, can't see that far. It's, yeah, there's a lot of risks out there. And I think the election is an important one. And we're not quite sure how the ANC is going to manage their way through this. There's lots of components of the electorate they need to pander to, or look after, or get their votes from. And yeah, there's a lot of uncertainty in it. So, and it's been a long time that the ANC have been in power, and they haven't delivered. So the poorest segment of the population are not happy. And it's we've seen around the world that when those people are unhappy, they hit the streets and cause trouble. So it's going to be very interesting how this goes, because the economy is not strong.
And inflation locally?
I think 6% is a temporary level. Might go through 6% a little bit, and then we'll come back to 5, and then 4.5. So 2019 average probably 5.5. 2020 average 5. It's not a nice number, by the way.
Right.
But it's better than we've had in the long distance past, in the short past. Not under control, but it's manageable.
And the economy, what can turn that around?
The demographics are in the favor of the economy. Unfortunately, the level of debt in the government is not, the individual debt has not got out of hand like it has previously. But banks are cutting back. The local economy is not looking good. Retail spend has been helped a lot by government employment expansion and by social grants. Government employment expansion is curtailed, and Eskom needs to go backwards, and I see Eskom is going, they've started to announce that they're going to have labour cuts at Eskom, which Eskom badly needs. And all these things filter through to retail sales on a multiple basis. Credit expansion is probably going to be curtailed, so that's also going to impact. The wealth effect from property is going the wrong way, and the wealth effect from the market is going the wrong way. So I think 2019 is going to be a really tough year. That's our view.
Inflation +4 on the equity market in 2019. I know, obviously, crystal ball gazing, but is it doable?
The stable fund can get inflation +4 this year. And we've seen it very seldom do we get 2 bad years in terms of asset allocation funds. You can get 2 bad years in equity funds. But asset allocation funds, it's very unusual to get back-to-back 2 bad years. But I think a naught score in 2019 was actually quite a good score.
Right.
Now, are we going to catch up and get 2019 and 2018 together, CPI +4? I doubt it. To get a nominal 8 to 12% this year on the stable fund is doable. But it's not our mainline forecast. I think it's going to be quite tough. We've got quite a lot of it locked in, so the bear case would probably be down at 6 with a 15% probability, and 12% would be at the top with about a 20% probability, with a range in the middle for the other probabilities, and a best case would be a nominal 9 to 10.
Let me ask you about the equity market in another way. But Naspers in its isolation, I know you hold it elsewhere at Ford. What's your view on
Well, I think it's too risky as a growth asset for the stable fund. But it does come down to getting into range on the value fund, because it is trading at a discount to net asset value. And we had a problem in the past, and one of the things on the risk was the title. And now that they've sold some and the money's come through, the question mark on that title and what can happen on it whilst it's still there on a Chinese government deciding differently type view, that risk is abated somewhat. So it's quite possible that Naspers could end up in the value fund in the future, not necessarily immediately, but that discount is looking quite attractive. And we've got less choice of assets here. And global tech and what Tencent are doing is very attractive. And the rump side of Naspers it was a problem, and they've been addressing that problem over the last 4 years. So the rump is now no longer a drag, and is potentially a tailwind for Naspers. So still too much of it is development assets and private equity type assets, which is too risky in my mind for stable. Right. But at the right price, it could end up in the value fund.